Hi there, everybody. It's Ifti from Extreme Returns. This is what I look like over here, Extreme Returns. My background, very quickly, for those of you who don't know, I qualified as a chartered management accountant in 1995, worked for big blue chip companies like Unilever and Mars Confectionery. I went into sales recruitment consultancy, then set up my own estate agency and then car hire company. I joined Etoro earlier last year because I think it's a future, and I joined the Popular Investor Program. For those of you who've been following it, I did a series on the top 10 most copied stock traders. So Jay Nemesis, Yeppy, Richard Stroud, HYJ Brighter, Wesley, and so on. And I thought I would take a slightly different stance. So what I did was I looked at the portfolio of the top holdings. So I only looked at the top 15 of all of these top traders. And I asked the question, which share comes up the most? So when you look at, this is Yeppy's portfolio, for example, there's Google, Facebook, and there's a few others as well. So I went through each of their portfolios and just asked that question, which share comes up again and again and again? And which share is the most common amongst all the top 10? Results were quite surprising. I thought it would be Apple, Google, Facebook. Guess what? It's neither of those. It's a company called AMD. Now, AMD are quite interesting. They're a chip manufacturer, basically. You can see their share price has done exceedingly well. They started at 48 and they ended up nearly double that. So 6 of the top 10 have got AMD in their top holdings, and AMD has increased by more than any other top share, 92%. Microsoft was second. That did surprise me again. I know it's a good tech company, but most people consider it to be very conservative. Alibaba came in, I suppose it equals second. Only 7% increase, and Alibaba's share price has been depressed largely because of the actions of the Chinese government. They're halting the spin-off of Ant Financial, and now they're putting tighter regulations upon Alibaba itself. Apple increased its share price by an amazing 77%. It was already a huge company at the start of 2020. As 2020 comes to a close, it's an even bigger company. I couldn't imagine a company of that size growing that fast, but there you go. Disney, 24%, held by 5. So these 3 shares, Alibaba, Apple, and Disney, are held by 5 of the top 10 traders as their main core holding. Amazon comes up 4 times, as does Facebook and Google. So what I thought I'd do is look at the share increases, as you can see here, over 2020, and then average it out and said, if somebody owned equal weightings of all of these companies, they'd get 48% return. Now, the NASDAQ as a whole returned 47%, so only 1% above that. And if you look at the S&P, it did a lot worse because obviously there's a lot of companies in 2020 that were very badly affected by the pandemic. Many companies will end up dropping out of the S&P 500 at the next re-rating. The FTSE 100 was in minus territory, minus 15. So if you look at the difference between somebody who'd invested in the NASDAQ 100 to somebody who invested in the FTSE 100, look at that, 63%. So I think the benchmark is this, 47%. If we looked at the top traders, Jay Nemesis, J. Edward Smith, he nearly doubled what the NASDAQ did. And I think that's such a fantastic achievement. In fact, I think these top 5 or 6 achieved fantastic results. Yepe came, although he's at number 2 in terms of the auto, these numbers will be slightly out of date because I did this maybe 3 weeks ago. You can see already 26,000 3 weeks ago, and I think he's now above 30,000. Look how fast it's been growing. I mean, one of them, Ruby MZA, Heloise Greff, she added nearly just over 57% on her copiers, and now she's in the top 10. She wasn't at the time that I did my series, but interestingly, Yepe is at number 2. I think he still is. He's stayed pretty stagnant, 2258. 3 weeks ago, he was 20,100. And I think largely because he's been underperforming the market. So he's the only one in the top 10 that's been underperforming the NASDAQ 100. Wesley beat it, as did all of these guys. But I think the top 3 or 4 especially have done a fantastic job. Now, interestingly, when you look at what's been driving their profits, it's been these kind of shares, the AMDs of this world, the Apples, Amazons. So it's the lessons we can learn is, firstly, it was a tech year. Will it continue to be that next year? That's the big question. I don't have that answer. But also, what we noticed is that the number of copiers will change drastically, I think, according to how the results are going. So people are ready to switch in and out of portfolios and reward those who are doing the best. Although I think there's a word of caution there. So if you take just the top guy who's Jay, if you look, this year he did fantastically, yes. Last year he did very well as well, but look in 2018. And I think largely because of the crypto crash there in 2018, he did exceedingly well in 2017, but half of that money would have been lost in 2018. It looks like he's learnt the lesson, and I just do think this guy is very, very good. Okay, so that was just a very good quick video showing you which are the most common shares. I hope you enjoyed it. This is Ifti from Extreme Returns. Thank you very much, everybody, for listening, and I hope to see you guys very, very soon.